Ceann Corla. Welcome back, Ceann Corla. Minister, this Credit Guarantee Amendment Bill is to make certain amendments of the Credit Guarantee Act and to support the needs of businesses to access additional finance in response to the economic difficulties resulting from the Ukraine war. And as well, you know, I'm a member of the Enterprise Committee, and this is something that we have been flagging and asking for to be done as quickly as possible. Your state-backed Ukraine Credit Guarantee Scheme proposes to provide low-cost working capital to SMEs, to primary producers and small mid-caps of up to €1 million on a 6-year term with no collateral required for loans of up to €250,000. And I suppose the devil is always going to be in the detail. It sounds, on the one hand, that this is great, that there's potentially 6 years' money is available. You don't guarantee within the bill, Minister, what the cost of finance is going to be or any terms and conditions attaching that the pillar banks might attach to that. The borrower will have to declare the costs have increased by a minimum of 10% on their 2020 figures, and I don't think that will be difficult for any business at the present time trying to access this scheme. But they'll have to show that the loan is required as a result of business impacts from the Ukraine war, and I presume that's to do with the cost thresholds rising. And it says the business must be viable. It must be a new loan with no refinancing. And I think, again, I'm not too sure what that statement is supposed to mean. A business is supposed to be viable, because there's a good few businesses that I'm aware of at the present time in terms of where the energy prices are presently going. If they follow this trajectory, it's going to be very hard to see how they're going to be viable without additional support from government, and it's not going to be the case that they're in a position to take on more debt. They're certainly not. The loan is guaranteed is based on an 80% state-backed guarantee with 20% backed by the lender, so much the same as what we did during COVID. And the standard facility size varies from €10,000 up to a potential $1 million under the current acts, and you say this will remain for the Ukraine Credit Guarantee Scheme. It also said that a broad range of facilities will be available from the lender, so you're talking about flexibility in terms of financing, whether it is overdraft, whether it is term loans, potentially, I suppose, whether it's fixed interest loans. Yet again, that's down to the individual banking provider, I would have thought. And there is a premium guarantee required of 0.29% of interest payable in order to provide that. So I suppose I have some concerns that I'd like to raise with you, Minister. One is the issue of interest rates. And we know potentially that over the course of the next year, we could see another interest rate rise anywhere up to potentially 0.75%, up to maybe 1.5%, who knows. And so immediately it asks the question, what is going to be the retail interest rate that the pillar banks are going to apply for somebody accessing this scheme? And that's the first thing. Secondly, many businesses are going to require restructuring in terms of their business operations. So the problem is they're going to need capital in order to keep the lights on, but they're also going to have to undertake restructuring of the business. That might require the payment of redundancy. So can they basically use some of this money, let's say, if they want to downsize, if they have to leave staff go? I think they probably can't. And I'm just wondering how that is going to help them basically restructure their business. I also have concerns which I raised with the Taoiseach some weeks ago in the Enterprise Committee. And I asked him, what is the status of a company which has warehouse debt during COVID? And my understanding was that from about January, February of this year, the companies who had availed of the warehousing debt scheme had started to open up, and they were now making repayments on that warehouse debt. And some of them, I understand, were slow getting going because their business hadn't recovered as they had hoped during COVID. And there might have been some debt forbearance going on from revenue, but I think that has come to a pretty drastic stop in the last 3 months. And I'm informed that the benign attitude that revenue was taking up to now with businesses who were impacted by COVID has come to an abrupt end, and that demand letters are going out now for the repayment of restructured monies, be they PRSI, PAYE, corporation tax, and demands with sheriff notes attached. So certainly the environment has changed, and I presume that it's down to a tacit decision taken by the Department of Finance to try and figure out what businesses are viable that can be funded into the future and what cannot. And this then opens up the vista of many private businesses, and the decisions that they're going to have to make is to whether they can try and find capital themselves to support their business activities into the future and avail of the scheme, or are they actually throwing good money after bad. And I would suggest to the Minister that without a scheme other than debt financing for some of these businesses, they're not going to be able to be saved in terms of whether energy costs have gone up 2, 3, 4, 500%. So I think the energy inputs are a really key measure here for a lot of companies. And I wrote to both finance ministers, and I raised this issue in the House with the Taoiseach here 2 weeks ago, of a processing company where their average monthly energy cost has gone from 8,000 to 57,000 euro per month, employing 50 people. And they're still not finished with rises. And their difficulty there is that they are processing using both gas and electricity. And their business is based on heating, cooling, and they use heat in terms of cooking, but they also have to use it in terms of sterilisation of machinery and all of that after, because it's food processing. And they require refrigeration and freezing for the same reasons, to try and preserve food. So they haven't got a hope of making up the difference, and even availing of the maximum of the government scheme, they get to 18,000 euro, and they're still at 57,000 euros, so 39,000 that they've got to find every month. So, and unfortunately, this is the reality that faces an awful lot of businesses at different scales. I also brought up with the Taoiseach here last week the issue of craft butchers in Ireland. And we have about 600 butcher shops. They were speaking to the media recently, but average energy costs for them have gone anywhere from 800 to 1,000 euro per month, up to 4,000, 5,000 euro per month, for the same reason, because they're using heat and because they're using refrigeration. So I'm just wondering then, in terms of, we're saying to businesses, well, look, we need you to engage with mitigating strategies, solar panels being an obvious one. And the issue was raised for small shops. They probably don't have the roof space to put up any solar in the first instance. But secondly, Minister, I'd point out to you that if you try to access any solar provider at the moment, in terms of putting up rooftop solar, you'll find it very hard to get anyone to talk to you with an installation window of less than 5-6 months. That's what they're all quoting at the moment. Some of them don't have the panels, they don't have the workforce. So saying to business, listen, put some solar up on your roof and you might get 20% of your energy price back, that's not a mitigation, because they won't be around in 6 months' time. And the other issue, I suppose, Minister, is the idea of people who are in intergenerational businesses. And what I mean by that is where you have a parent or a grandparent who started a business, they passed it on, and oftentimes you find that you have businesses, particularly in the countryside, where you have a younger family member working the business, and part of the remuneration of the business is still being paid to the founder. So the founder might be either contributing to a pension, or they're getting a small support payment, or what have you. And in order for them now to find new capital, it's probably not in the business, and therefore the only place you can go is the shop of mom and dad, or your uncle or aunt, maybe, if you're lucky. And the difficulty for those people is they're being asked now to put up capital that they're probably trying to keep for their own pension requirements. And essentially they're wondering, if they put the money in, and if things continue to go badly for the next 12 to 18 months, well, all they have done was saddle the business with additional debt, keeping a business that's ultimately not viable going, and seeing their nest egg go up in smoke. And I made the point, Minister, whether or not the Finance Department could look at some kind of an increased credit for people who are going to go, and I have a gentleman at the moment who's cashing in a 20-year investment policy to put into his business as working capital, because he has no home to go to in terms of trying to find alternative capital at this minute in time. And the point is, that was money he was putting aside for his retirement, and he's very close to retirement age. In actual fact, I'd say he's at it already. And it's a very, very hard decision. And in a way, it's very difficult to ask business owners to stomp up and to tell them that, look, we'll support part of your energy rebate, we'll support you with an energy rebate, we'll support you with fixed cost debt, because it's just not going to do it for them. So I think we need to be doing more at the enterprise space in terms of trying to get people out to look at real restructuring, professional restructuring. And I know the SCARP legislation is soon to come through, Minister. I'd love to say that I hope it will not be used by very many businesses. I'm afraid that it's going to be. Sorry, it's in, but I'm afraid that it's going to be, because unfortunately that's the only way people are going to get some protection from their creditors while they try to arrive at a new solution. But even within that, I think there's a lot of businesses and to a degree, as I say, maybe the Department of Finance is taking a kind of a longer term view as to who they should support and trying to see can the strongest survive over the next number of months. But from the amount of communication I'm getting, I would say there's significant problems out there in the SME space. I think we've got to do more. I think, this is a start, but I have a concern that a lot of businesses here are not going to get financed. And I'd point out to you, Minister, during COVID, we couldn't get the pillar banks even at a 20%, where they're only handling 20% of the risk, they wouldn't take it on. And that's a problem. And I think it's going to be a problem here as well, because a lot of banks are going to look at the cash flow numbers, they're going to look at the sales projections, they're going to look at the margin, and they're going to say to a fellow, listen, buddy, your business is not going to stand up to all of these repayments, particularly when your energy cost has gone up by 300-400%. So I know, Minister, we're in a difficult position and government is trying to do something, but unfortunately I believe we have to do more. And although this is a start, I don't think it's going to be enough, honestly. And I think we've got to do something far more significant in terms of energy credits on an ongoing basis.